So in taxation of individuals and companies, we have three types of incomes: the employment income, business income, and investment income. While another important consideration or tip that you have to consider, is it an income or an expense? So if it's an income, it's either a taxable income or not a taxable income. While if it's a deduction or an expense, it is either an allowable or an unallowable expense. So we look at employment income. So currently, these are the employment income. So we'll start with the taxable incomes, then taxable, also this is under taxable, then to non-taxable, then allowable deduction. We also look at the reliefs. So these are updated. So that's why we will redo it again. So taxable incomes. So incomes that are taxable. Number one is all cash payments, however described, and the value of non-cash benefits exceeding 3,000 per month, not 3,600 like the previous one. So these are the things you have to note. So all cash benefits, however, anything, it will be charged. It will be taxable. Then cash pays include wages, salaries, sick pay, leave pay, fees, commission, bonuses, service, gratitude allowances, directors' fees, overtime, pension, entertainment, and other payments received in respect of employment will be taxable. Then number three, any excess mileage reimbursement to an employee based on the rates that are higher than the AA rates will be taxable on the employee. This is effective from 1st July 2023. That is the mileage is like the transportation allowance, isn't it? So if it is higher than the specified rates, it will be taxable. Then number four, another thing that will be taxable, club entrance and subscription fees shall be treated as taxable to the extent that the expense has been allowed against the employer's income. So again, this is where we say that if in the books of the company, the club entrance or subscriptions is treated as an unallowable expense, we will not tax the employee. But if treated as an allowable expense, we will tax the employee. Then there are some taxables also that are not in cash, but they are also taxable. Number one, gain or profits from employment that are not paid in cash are chargeable to tax. Such gains or benefits include, so sorry for the mishap maybe. So this one was just like an overview of it. So where an employee is provided by a motor vehicle, the motor vehicle benefit, it is also taxable. A housing benefit, taxable, you know the criteria. Then a loan at interest rates that are lower than the prevailing market rates. So also fringe benefits, you see on the other one, on the other data, so this is an updated data, the fringe benefits were not taxable, but here they are taxable. Then number four, household utilities, so including telephone, electricity, water, security, domestic expense, isn't it? So here, they will only be allowable if they are less than 3,000 per month. But if above 3,000 per month, so we don't look at the specified rates, isn't it? Here we have the value already. If it is above 3,000 per month, taxable. Then pension contribution by a tax-exempt employer to unregistered. So the pension contribution to an unregistered pension scheme. Then taxable incomes, so incomes that you can receive and I will not be taxable. Like just the introduction, we looked at the taxable and now we are looking at non-taxable. So non-taxable, we have meals by employee up to a maximum of 4,000 per month or 48 per year. Night out of 2,000 per day. This is what we call per diem, isn't it? So if it's above 2,000, it is taxed. Medical cover by the employee. We know the discriminatory and not discriminatory, isn't it? So taxable according to the specific. Then in case of an non-citizen, so this is what we call passages between Kenya and outside. So the transport, if the employer pays a transport to a non-citizen, so one who is coming from outside, isn't it? That amount will not be taxable. So you see it is a non-resident. Then number 5, pension contribution made by an employer who is a person chargeable to tax to a registered or an unregistered scheme. That is allowable. Limit is 20,000 per month or 240 per month. Pension contribution to a unregistered, are registered. So the person who is contributing must be chargeable to tax. Then we look at allowable deductions. So sorry again, the mishap is just also coming in. So the amounts are deducted from the employee's emolument in order to arrive at the amount which is subject to tax. So we have a mortgage interest. So the interest will be allowable up to a limit of 300,000 per annum. Then pension contribution will only be allowable to a limit of 20 per month. Then personal relief. So we are looking at tax relief. So the tax relief will be 2,400 or 28,800 per year, so per month and per year respectively. Then tax relief on post-retirement medical fund contribution. So this is not effective yet. So with effect 1st January 2024. So I think if you are doing December, this one you will not do it. Then we look at insurance relief. So insurance relief is granted to an employee who has paid insurance premiums for life or health or education policies for himself, wife, or child. Is it so? We have life assurance, health, life and health is just the same thing, and education, isn't it? So relief is given at 15% of the premiums paid to a maximum of 60 per annum. So it will be 15% or 60, this is the limit. Then for education and health, the policy has a maturity, so must have a maturity of at least 10 years. So if the education policy is more than 10 years, that's why we will grant him the insurance relief. Then another addition that came in 1st January 2023 are the contribution to the National Hospital Insurance Fund. It also qualifies 15% or 60 per annum. So the contribution that you'll be making to NHIF. Then the Employment Act 207, the Affordable Housing Levy, also a new introduction in matters taxation. So each employee and employer shall pay the Affordable Housing Levy at the rate of 1.5% for the employee's gross monthly salary. Remit the amount comprising the employees and the employer's payment within 9 working days after the end of the month in which the payment is made. So the affordable housing levy also will be coming in at 1.5% of the gross monthly salary. Then we'll proceed to incomes. So mainly incomes undergo what we call withholding tax, isn't it? Mainly company investment income comes from withholding tax. So maybe I'll not go in details. You can maybe you'll look it later because we must also do the equations. So maybe I'll talk on withholding tax exemptions, isn't it? The one that are exempted. So number 1, dividends received by a company resident in Kenya from a local subsidiary or associate, which it controls 12.5% or more of the voting power, isn't it? So if a resident company is receiving dividends from a subsidiary company and it has or an associate and it controls 12.5% or more of the voting power, it will not pay the withholding tax on dividends. So here is it. So dividends nil for resident companies, then resident qualifying, and so the company will not qualifying and non-qualifying. So maybe I think qualifying and citizen for ESC. So if you are a resident, you'll pay 5%, isn't it? I think here it is for resident, but it will be a qualifying. Sorry, so this one is 5, sorry. So the data had been updated, but this one I just took back from the same data. So I think it is here, 5%. So for a resident, because here is a resident, isn't it? A resident, so it is just that it is not clearly visible. That is it. So dividends, nil for companies with shareholding of 12%. Then if a resident in East Africa, isn't it 5%? Then it is a qualifying. So by a qualifying dividend, we mean the 5% is final, isn't it? Sorry, I think I did a mess. Okay, it was a 10 here, then here 5. You see, this 10 is for a resident company. This 10% is for a resident company. Then for a resident individual, it is the 5%, which is a qualifying dividend, not subjected to further taxation. Then royalties, interest, management fees paid by special economic developer. So if you are in a special economic zone, isn't it? So it goes for the first 10 years, you will not pay, but it must be a non-resident, effective 1st July 2023. Then marketing commission and residue audit fees paid to non-resident agent in respect of export of flowers, fruits, or vegetables. So that one, it will not have a withholding tax, it will be exempted. Then interest payments to financial institutions stated in the on the 4th schedule of the Income Tax Act. So there's the interest here. Exempt interest. So the stated ones are interest from foreign countries, isn't it? Then a 2+ year government infrastructure bond, savings in post bank, and also savings on housing development bond up to 300,000 per annum. And all this information is included here with the percentage, isn't it? So like you can see. So for companies, so these percentages are for resident and non-resident companies. So let's wind up. Then payment made to tax exempt bodies. Then resident management, professional training, and contractual fees whose aggregate value is less than 24,000 and below per month. So if maybe you are doing some professional, some audit fees, but the monthly turnout is below 25, you will not pay the dividends. Then air travel commission paid by local air operators to non-resident agents will also not be taxable. Then on business income, we had we just the same with the other notes. So then on the format, I think we also looked on it where there are 2 ways, then the assessment. So remember here, we will include less. So move sales down. Affordable housing levy. So we were looking at particular question, this one. So I think what we will do, we will just start off. So maybe I'll not remove the details, but for these ones, I can delete them. So the question read this way. Halima Ali is a resident individual employed by a finance manager at Motec International Limited. She provided the following information related to her income. So we'll be using the current year because in your exam, you'll not be given in the year later. Then these are the rates that we'll be using. So her basic monthly salary, 250. Then the months are 12, isn't it? So you'll skip one line here in the middle. Then where is it? So here, equal sign, you take the 250 multiply by the 12. Then we also saw that all allowances are taxable, isn't it? Then the cash bonus is just once. So all these allowances are taxable. So we'll just add them this way. So hardship allowance. So you open your brackets, but multiplication comes first in board mass. So you can go direct plus multiplied by the 12 plus the commuter allowance multiplied by 12. Isn't it 140? Let me check the chart. Yes, I've shared I've shared the one who is asking for the document. I've shared the new document in the group. Then the cash bonus also is a taxable income, isn't it? You take the amount there, isn't it? Then you see donations. Donations to a national kidney fund. This is a allowable deduction, isn't it? So you'll be allowing it, so you take it as a negative. Where is here? Just one more minute, I check on the format. Yeah, then so maybe I'll be developing another easier approach of doing that. So maybe taxable income, tab then allowable deductions, then so I'm just trying to see then other incomes. Then net, so the taxable income. So this will be the total. So I think we'll be using this one to solve, isn't it? So it's just the same. So maybe we'll use in the other question. So then furniture. So you can see with the new rates, so where is it? So the cost of furniture is always, I think I'm missing the other file, but it is 12%. So I think still on 12%. Maybe I'll do another further analysis of that. Multiplied by the cost of furniture. So it is always 1% per month, isn't it? Then maybe we will communicate later because so you see, we'll be continuing. So always the housing benefit comes last, isn't it? So the higher of. Then medical premiums paid by the employer. This is a private expenditure, isn't it? So the amount during the year. So this one will also be taxable. Then pay will come later. Then motor vehicle benefit. So for motor vehicle benefit, you look the higher of the CC rating, and the CC rating is 102, 300. I think I'll just maybe I'll just send another additional file to add on the same. But for the meantime, I forgot and removed the rates file. That's what is becoming a challenge. So sorry for that. So let me see if I have the rates file. So just a minute, let me bring in the rest file. I'll send the rest file maybe later on. So copy. So I think here's the rates file. So these are the CC rating. These ones are just still the same. So these are the CC rating, and you saw that it had a CC rating of 2,500. It is so the annual rate because we are doing it. So 103, 200. Then or what we say 24%. 24% multiplied by what is it? The cost. Sorry, so we must always start with equal sign. So equal sign. Then you multiply by the cost. Then we continue. So the higher, isn't it? The higher of you take. Then so pay will come later. Then contributions to a registered pension scheme amount per month. So this is a registered. It means it is an allowable deduction. So it is always the lower of. So again, maybe I'll bring this one down, Control V. So from our notes here, it was 20,000 or 240 per year, still just the same as the previous one. So here, the limit is 240. 1, 2, 3. Then the actual contribution equal to the amount multiplied by 12 because it's per month, isn't it? So the higher of the two are the lower because it's a deduction, so the lower of the two. Then we'll continue. So he obtained a mortgage loan, the amount of the loan, monthly repayment. So this one doesn't, the monthly repayment, this one is the PMT, isn't it, for those who we learned, but so it doesn't matter. Here, it is only the interest. You can see here it is the interest, isn't it? So the interest is allowable up to 300,000, isn't it here? Where is it? Sorry. Here, mortgage interest deduction. So interest only up to 300. So the lower of which one? So you see, this is the total that he paid, isn't it? So we will take, of course, the lower. Then you continue. Discriminatory medical scheme. So because it is discriminatory, it will be taxable. Then award, if the amount exceeds 3,000, it is taxable. So equal. Then sans fees treated as an allowable expense. So if it is treated as an allowable expense in the company's book, we will tax it here. But if treated as an unallowable expense in the other books, in the company's books, here we will allow it, isn't it? So equal sign, you take the amount, isn't it? So housing benefit is the last because it finds the 15% of these ones. Again, let me do this. I think the other file was also very important. So maybe just a minute more. So I'll be sending the updated file again because I want to do everything at once. So move. Okay, so I'll be sharing I've added the tax rate and also this one that we were using the other day. So this one, it is at least specific which one, isn't it? Like the percent. The percent is just the same, the percentages. So here, where was it? I was looking for housing benefit. Here it is. So we will always assume it is the all-time service directors, isn't it? So that is what we assume because we have not been told to be an all-time. So, and it is not an agricultural employee. So 15% of the employment benefits less nominal rent stroke the market value. So that is the actual rent paid less nominal rent if you've been given the nominal rent. And then it also uses the higher of taxation criteria. So the higher of the two. So the total we find before housing benefits here, isn't it? So this total, maybe I'll add another cell here. Control Shift plus, then Shift cells down. This total is what we are calling employment benefits. So here you find the total, so equal sign sum, then you press tab, you select everything, control enter, control bold, isn't it? So the housing benefit, you can see house provided fully furnished. So the market rent per month was 80,000, while so the cost of furniture we already dealt with it. So per month, isn't it? So the actual or the market value, isn't it? So this one you multiply by 12, while 15% multiplied by the employment benefit. So because it's a taxable income, the higher will be taken. So here you will find the total, which is this one plus. Then of course, so because we had already done the allowable deductions, we will just find the sum from here plus because they are already in. Sorry, so we have a problem. So this one I'll hold on control. This one, and this one. Then I hit enter. So it will take the sum of the three directly, isn't it? Or in other terms, it is this one plus sum of the trim. So just to maybe I'm being reminded to close the bracket just to confirm. So that way, so you can use even control. So this is the net taxable income. So part one of it is solved, isn't it? So compute the tax liability. Let me go back here to format. Then let me first see. So this is not effective yet. Then NHIF contribution also. So this is what I want to do. So I'll be creating something just so insurance relief. So on insurance relief, we have the 10 plus years education premium, isn't it? Education stroke health premiums. So it is 10 plus years, isn't it? So maybe I'll write stroke. So just because we'll be just learning. Then life assurance premiums. So let me see. So this is also effective. The NHIF contribution. Sorry, just a minute as I want to take everything correctly. This is not effective. Then the housing levy is already effective. So yeah, format. Just a minute as I want so that I'll be giving you something you can use. You know how to create a custom list. So pay, then affordable levy. Just a minute as I create these ones. So 28,800. So we have already reached at the tax incomes. I want something to be really good. So here, so 15% of the total premiums. I think so. Of premiums paid, then the limit. So that's what I want. So just as we create this one, isn't it? I'll be sharing, I'll be sharing another this Excel, the updated one. So stroke 60. So just a minute, I'm winding up. Sorry for the, I had not, maybe So pay is not that one. That is personal relief. So personal relief. Sorry, I've been taking a lot of time, but so it will just be good. Then this one will be the gross tax. So sorry, I'm getting the caps lock. I will just know that after the pay and the housing levy, we then here, this is the tax payable. So I want you, after you've written these values here, I want you to go to file, isn't it? You know how to create a custom list. Then you go to more, then you go to options, then advanced, then you move very down there. You will see here, edit custom list, isn't it? So you click on it. Then here, you import the list from cells, isn't it? You just select them this way, isn't it? Then you click here on import. Then you click OK. So you click OK. So if you will be using that laptop that you've set the custom list on it in doing your examination, it will be very effective in that you just write gross tax, isn't it? This way just gross tax, then you hit Control Enter, then you drag up to tax payable, isn't it? So this one will apply to all the Excels, isn't it, that you'll be working on. So that's what I was creating. So having that created, I'll select the bands, Control C. Then I go back to the question. It was this one, isn't it? So we have the net tax payable. So, and these are the bands, the taxation, Control V, isn't it? So you see, on the first 288, so maybe I'll translate this band to an yearly format, but with the signs, isn't it? So maybe from 0, isn't it? 0 to 288, 1, 2, 3. That's 10%. I'll be sending this updated file. Then from 2881, so it is on the next, isn't it? So plus 100, so it goes to 388, 000. Then so from this value, so on the next, isn't it? So like I can use this cell equal, isn't it? This 388 because plus 100, isn't it? So equal 388, 1, 2, 3 plus the 5, 6, 1, 2, 1, 2, 3. isn't it? So from this one to up to 6 million. So 6, comma 1, 2, 3, comma 1, 2, 3. Then, so from 6, so from 6,000 plus the 3,600, it will lead, of course, it will lead you to 96, isn't it? So here equal this one plus this 36 here, it will lead you to the 9,600, isn't it? So from here to 96, then above, sorry, so 6, comma 1, 2, 3. So this one will be 25%, then 30%. So the 32.2.5% and the 35% banks are the ones that have been introduced with the current government, isn't it? So maybe with that, I can delete this one, Alt HBN to remove the borders. Then so these are the tax band, Control X, Control V, isn't it? So you just look, isn't it? Sorry. I've really messed up again. So Control Z. So I don't know if I'll get that. No, let me just do this. So you see, again, you have to have these values. That's why they are always there. So on format, isn't it? So you must have these values also. That's why they use on the next, so that it would be very easy for you. Control V, I'll widen. So you see, having these two will help you to establish where his income is ranging from, isn't it? So you see it is above 6 plus, isn't it? So it is 601 and, isn't it? So what is the amount remaining to reach here 6,000, isn't it? So here, equal sign, you take the amount there, you multiply by the rate, isn't it? Then you drag up to where the salary falls in, isn't it? So the salary falls in this value above here. So in above here, what we will do, equal sign, you open your brackets, isn't it? So what is the pay, isn't it? Minus, what is the lower boundary here, which is 6 million. So 6, 1, 2, 3, 6, 1, 2, 3, 1, 2, 3. Then you hit, I'm being reminded to close the bracket. This is the range, isn't it? But remember, this range has not been multiplied by the rate. This is what is above the 154,400. So you multiply by the rate. So this one will result to what we call gross tax. So the gross tax. So even you cannot gross, you cannot, sorry, just write so gross, then tax. You don't, if you have already created the custom list, isn't it? You just come here, then you drag down up to tax payable. isn't it? So you can widen, but it is also good. So here, the gross tax here equal sum. You press tab, the sum of these ones, isn't it? From the bands. Then control enter, control bold, isn't it? Payee. So payee, we all know that we are lessing, isn't it? So equal sign, the payee was provided in the equation. So where is it? Here, pay per month, 68 per month, isn't it? 68. So you must remove that tax per month. So 68. So maybe I can just even select the cell because this is directly to a cell. So this one, you multiply by 12, isn't it? So with the 1,000 separator, then the affordable housing levy, it is being cut at 1.5%, isn't it? So negative 1.5%. You multiply by the total, where was it? The basic salary, isn't it? Only 1.5% of the basic salary. Then we go to, sorry, am I seeing? So then these ones we add. Sorry, I think I'm confused. Is it less or add? So what do you do to the personal relief? We add it, isn't it? Tell me, what do we do to the personal relief? We also less it, isn't it? So we all less them, isn't it? So I thought the reliefs were to be added, isn't it? So the relief here, 28,800. Did he have any life insurance? No, 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 no NHIF contribution, isn't it? So the tax payable equal sign sum, then you press tab, then you add everything. Control enter, control bold, alt HBU. So this is the net tax payable, isn't it? So maybe in the custom list, you can do it as net tax payable, because for me, I like it that way, so that I know that many questions come in that order. So you can also just go back to it, edit custom list, then you select the one that you use, it will come here. Then here you just put a cursor, then you do net, isn't it? Then space, then you do add, then you do okay. You do it, then okay. So that will be that way. So we look at another question. So maybe we look at question 1 here. Or what we do, because it's 7, sometimes I like also taking a small break and we warm up. So let's take a 7-minute break, if you allow me. Then we come to Joram Bundi. Is also an individual. Just I refresh also. Then we come to this one immediately. So we take a 5-minute break. At exactly 7:10, we are back to continue. You multiply by, sorry, you multiply by the percent there, which is 32.5%, isn't it? Then Here, you come here, gross tax. Remember, you have already created your custom list, isn't it? So you just drag down up to net tax payable, isn't it? Then the gross tax will be the sum, so equal sign. You do sum, then you press tab, the sum of the three, isn't it? Of the four there, then you hit enter. Then the payee, so the payee we add, of course, because it's also a tax that you have already paid, isn't it? You add it, you don't lose it. It was 68, isn't it? So 68, and it was per month multiplied by 12, isn't it? Then the affordable housing levy equal sign 1.5%. You multiply by basic salary. Then the personal relief negative 28,800. Then you check, did he has any insurance relief? No, isn't it? So you can see this one has just so I'll edit the custom list because it is not, it is taking the value to another year, isn't it? So maybe just one more minute. So file. So you see I had not much prepared the data, but it's good because I'm doing it with you, so you can see how to actually prepare it on your own. Then edit custom list. Then here, I don't want these ones to be here. You can see they are on another sheet, isn't it? So what I want it to be maybe this way. So maybe you have to remember it is 15%, isn't it? So you have to remember it's 15%. Then I just write 6K, a small k. Then I close the bracket. So here you know it is the limit. Then you do add. So again, you can see it is coming badly, the insurance there. So I want it that way, isn't it? So you can check and see how you want it. I want it that way. Then I click add. Again, no, it is refusing. So I don't know. Maybe you just get to know it is the, because if I do add, so maybe no, the limit is just 60, because it will be making your data look more not good. So this way. Isn't it? So that way, so that this is 15% or the rest, isn't it? Then he didn't have insurance relief on either education, life, or NHIF. So the net tax payable equal sign, the sum, then you take everything. Sorry, I never pressed tab. So I'll delete first, equal sign sum. Then you press tab, then you take everything there. Control enter, control bold, Alt HB U, isn't it? So that will be the next net tax payable, isn't it? So someone said that the payee you add, I'm not sure. Here is the file. Gross monthly, sorry, I thought basic. So where is the gross? So this is the gross, isn't it? So the gross of the total. I'm not sure, but I'll also check but it is the gross. So maybe someone can tell me which is the gross, because I'll be confirming later on. But you can see the data is just clearly saying it is on the gross monthly salary. We look at another question. We can look at this one. So it is also an individual. So Joram Bundi is an employed manager. So remember, we'll be changing these years to 2023 because of the new tax rate, isn't it? So we don't use the other years. So you can always start from here. So Joram Bundi. Computation. So remember the details also are very computation of the net taxable income. So you can input in the years. So I'll just go directly. So I can use 12. You see this data, it is not the same to what we've used, isn't it? What we are used to. So basic salary, 150. Yes, I know someone really confused me. Because this tax you have already paid, this pay you pay per month. Housing levy is also you pay per month, isn't it? And again, you see, it's just simple logic, isn't it? If you add these two, it means that, but I'll confirm by the next class. I think I've just forgotten. You're just increasing your tax. If your gross tax was this one, how comes your net tax become this one, isn't it? It is not logic. So these ones are less, so I'll change it to a negative. Also, the house levy is being paid per month, isn't it? So these ones you have already paid. So the tax that you'll pay is only this one. And maybe in the format, you see, it was just clearly less affordable levy, pay, personal relief. So someone confused me, he said that these ones are added, but no, they are not added. They are less because this is the gross tax. Your net tax payable cannot increase. Thank you for that. So Joram Bundi. So we are on Joram Bundi. Basic salary 150 per month. So here, basic salary. Okay, thank you. So we'll continue. So here, the basic salary, you'll skip one line for the higher off, isn't it? So equal sign, it is 150. So here you just write them 150, 1, 2, 3, multiplied by the 12. Then he was given an annual clothing allowance of 91,000 for purchase of office attire appropriate for his position. So we said any allowance is taxable, isn't it? So clothing allowance. Clothing allowance here, the 91. Then he also earned management monthly allowance of 25 for attending meetings from April. So I said these ones we will use 2023, isn't it? So assume is at the year end, isn't it? Then from 1st April, so April, May, June, July, August, September, October, November, December, there are 9 months, isn't it? And you see it's an allowance, isn't it? So management, any allowance is taxable, isn't it? So management allowance. So the amount was equal 2,500 multiplied by 9, the 9 months, because we are counting also April, because it's 1st of April, not the end, isn't it? Then we continue. So an additional information number 3. Then I forgot to say, so this one is what we'll be using. Where is it? This one. Control C. Here. Control V. Isn't it? So maybe because I not started correctly, Control Shift plus move cells down. Isn't it? You bring in the taxable incomes. So Control V, Control bold. So anyway, we'll start seeing allowables. We bring in the data. So we are on additional number 3. The company provided him a saloon car, 3000 cc. The car had a cost of 2,500 in 2012. Depreciation policy vehicles is at the rate of 10% per annum on cost. Isn't it? So this other one on depreciation is just to make us confuse us, isn't it? Motor vehicle benefit. The depreciation, that one will affect the company's books, not an individual, isn't it? The depreciation. How will an individual face depreciation? So the CC rating was 3,000. So you go to tax rate. Over 3,000 is 178, 172, 800. Isn't it 172, 800? So let me see here. 172, 800. Then 24%. 24. So you must start with equal sign. So 24% multiplied by 2,500. 25, 1, 2, 1, 2, 3. So always use 1,000 separator. So Alt HK. So the higher, isn't it? Of course, the higher off is the one will be taken. Then we continue. Then he was provided with a company house leased at 25,000 per month, a nominal rent equivalent to 8% of his monthly basic salary was deducted by the company to cater for the rent, isn't it? So I told you this one is always the last one, isn't it? Then we go to the next. The education fees for his 2 daughters amounting to 100,000 were paid by the company during the year. This amount was charged in the company's income statement. So you see, it was treated as an unallowable expense, meaning it was charged. So if it was charged, here it becomes an allowable deduction, isn't it? Yeah, are not taxable income, not allowable, not taxable income. So I think it was not recorded. That's why I'll send this file. Also, it is fully loaded. So here is it, because it's an income. You just ask yourself, is it an income? So not taxable if treated as an unallowable. So if they don't allow it in the company's book, or they include it in the company's book, it will be not taxable. So that one you ignore because it is not taxable. An income here, you don't do not taxable incomes, isn't it? You're just using here. You can see you don't have. Maybe if you are given the reported profit, isn't it? So we continue. Then Joram Bundi has a life insurance policy for self and family, for which he pays a total annual premiums of 150. Isn't it? So if maybe if you don't want maybe to be coming back to the questions, you just write there gross. Gross tax, isn't it? You've already created a custom list for it. You drag up to net tax payable. I'll widen. So sorry for the, okay, it has not gone so much. So you see, this is a a relief, isn't it? A life insurance for self and family from the computation here. Insurance relief is granted to an employee who has paid insurance premium for life, health, or education for self, wife, for self and family. So what is their annual premiums? 150. So it is either 15% of it or 60,000. The lesser of the two, isn't it? So you can introduce another box here, control shift plus, then move cells down. This is not automatic, it goes to that one. So the lesser of the two. So 15% equal sign, 15%, you multiply by 150, 1, 2, 3, or a limit of 60, 1, 2, 3, isn't it? So the lower of. So of course the lower of is the 22. Then we continue. So he is contemplating purchasing a residential house in the near future. During the year, he invested 250 in a registered home ownership saving plan from which he will earn an interest of 10,000. So it is not the investment, the interest. It is allowable up to, let me confirm that one. So this one was not included here. It was here, home ownership saving plan. So you can see that the notes are in detailed. Sorry, I was looking the wrong one. Here, where is the HSP? Am I missing it? Here, allowable up to 48 per annum, only 48, not 300, the interest. But you can see his interest is 10. So which one is the bigger of it? Is the 10, isn't it? So the lower, because it's an allowable deduction. You come, you take the allowable deductions here, control X. You can maybe place it just down there, control V, isn't it? So interest, home ownership saving plan. So it is always the lower of, so the actual amount, which is 10, 1, 2, 3, or 48, 1, 2, 3. Of course, we will take the 10 and it's allowable deduction, so it goes as a negative. Then we continue. So he contributed shilling 25,000 per annum towards a registered pension scheme, isn't it? So because it is registered, isn't it, an allowable deduction, isn't it? So pensions, registered pensions, contribution. So it is the lower of the actual amount, and the actual amount was 25,000 per month, isn't it? So the actual amount will be equal sign 25, 1, 2, 3, multiplied by 12, isn't it? While the limit is 240, 1, 2, 3. While the limit is 240. So the lower of, isn't it? So maybe here you can include lower of if it has a lower, isn't it? So you can also create a custom list for that. Then this one, higher off. If it's an income, you take the higher off. We are continuing. Okay, again, I've got something. I think someone is saying we less pay. You know, I did it so many times ago. Last sitting, we didn't have managed time to reach in taxation. We less pay NHIF, housing levy, personal insurance from the gross salary. No, from the gross salary. No, it was always in the tax. Those tax have already been paid, isn't it? Those ones you pay monthly. So what we do when we are computing the net tax payable, we will remove them because we have already paid them. So here, the lower value, it is 240. So his private telephone charges averaging to 25 per month were paid by the company. So that's the taxable income, 30% of the cost, isn't it? So telephone. So equal sign 30% multiplied by 2500 multiplied by 12 because it's per month, isn't it? And we are doing per year and it's only 30% and it's a positive of that. Then he earned interest of 150 during the year from his investment in housing development bond, isn't it? So this will not be taxable. This is an income. So you first ask yourself, is it an income? Then is it taxable or not taxable? Isn't it? So the limit is 300, isn't it? So it has not reached. It will not be taxable. Then in the month of November, so I said we'll be using 2023 because of the new tax rate in all our equations in taxation. He earned a bonus of 75, provided the bonus is above 3,000 taxable bonus. Equal sign, it was 75, so I just write them 75. Then we continue and see. So, okay, then we are winding up on this. So, Joram Bundi reported a gross income of 900 for the year ended. So we said we are changing it to 2023 because of the new tax rate from his pig rearing farm. This was before deducting the following expense. Before, isn't it? So we have allowable and unallowable expense. This is business, isn't it? So purchase of pig feet, this one will be allowable. So maybe you can use caps lock, allowable. Then wages, non-allowable. Purchase of water tank, capital expenditure, allowable. Sorry, allowable. Then this one also salaries, non-allowable. Then farmhouse renovation, a capital expenditure, allowable, isn't it? So this one is where this one comes in. Here, other incomes, isn't it? So we had not computed something so to do with the housing, isn't it? So the housing, where is it? Here, he was provided by a company's house, leased at 25,000 per month. A nominal rent equivalent to 8% of basic salary. So here, this is where we are meaning this way. So on this employment too, here, what we are saying here, 15% of all employment benefits less nominal rent, or the market value less nominal rent. So we've been given the market value and the nominal rent, isn't it? So remember, this is per month, isn't it? So we can do it per year. So here, so this one is in bold. So maybe here, I'll widen up to, you select all of it because I want to add, so that all the cells that have the data will go down, isn't it? Not that this one remain up. So housing benefit. So equal sign, I'll open my brackets, but even not so. So it is 25, 1, 2, 3, isn't it? Per month. Remember, this is the value here. Then multiplied by 12, isn't it? Then minus 8%. So maybe this I'll put in bracket, minus 8% multiplied by the basic salary. So you see here, this is per month, isn't it? A nominal rent equivalent to 8% of his monthly basic salary. So so because you have already changed this 25 to years, you can just use this value here because it was already multiplied by 12, isn't it? Then 15% of employment benefits. The total of it is the employment benefits. Control shift plus move cells down. So here, equal sign, sum, we press tab, select everything, control enter, control bold. So the higher of 15, so equal sign 15% multiplied by employment benefits. So the higher, we always take the higher, isn't it? So control X, I can put this one here, control V. I just don't want to add another one. So equal sign this one plus this one. Control enter, control bold, isn't it? Is there anything else we are forgetting? No, isn't it? Because we are going one by one. Maybe this one which comes later, isn't it? So after allowable deductions, equal sign, sum, you press tab, the sum of everything there, isn't it? Control, enter, control, bold. This is now the net taxable income. So from here, the first thing you do is the assessment, isn't it? So the assessment, I don't know how you will survive, but I know this one cannot be very hard for you. Control C. Then here, Control V. You can widen the space. Isn't it? So where is the income falling? It's falling in between here, isn't it? So we'll do the rates here. So equal sign. You take the cumulative, you don't multiply with the bands, isn't it? Then you drag, so I'll drag only down once. So control X, sorry, control V. Then I drag only once down, isn't it? So here, equal sign. So what is the upper band of this layer here, isn't it? Which is, this is supposed to be 388, not 380, isn't it? Because it's 288 plus 100, 388. Yes, that way. So here, equal sign. So you take this value. So you can do it in brackets. you take this value minus the upper bound of this one, which is 388. You close your bracket, you multiply by the rate, isn't it? Then you come, I'll carry everything here up to here, control X. Sorry, I've forgotten the other incomes, sorry. So that's why control V. Then I'll add, so if you are to add a space here, make sure you are not leaving anything out. So I'll add at least 4, control shift plus, move cell down, control shift plus, move cells down, control shift plus, move cells down. I think I can work with that, isn't it? So sorry for the small mishap. So here is where you bring in the add other incomes. Sorry, I was forgetting that one. Add other incomes. So control X, control V, isn't it? So it was this last one that I had forgotten it. So this one, pig farming. So you see a gross income, isn't it? So gross income. So the amount I can work it here. So equal 900, 1, 2, 3. Then we have allowable deductions, isn't it? So the ones that so you bring in the non-allowable because you have been already given. So you remove the ones. Sorry, no, let me delete this one first. You see, if you purchase a capital expenditure, it will be allowed, isn't it? Then wages will be non-allowable. They won't allow you to maybe to carry off wages. Purchase of plastic tank allowable because it's a capital expenditure. Salary will be non-allowable, while renovations will be allowable capital expenditure. So you just bring in the 2 and non-allowable deductions. So you can do with a negative. So it will be the wages minus the salary there. So you can see these ones are not in values. These ones are not in values. So it is 80,000. That's why it brings up that one. So equal sign 80, 1, 2, 3 plus 150. 1, 2, 3. So the total here, not the total because those ones are allowable, we are lacing them. So equal sign this one plus that one there. Then, so in our equation here, if you double click, you see it has taken the blue one, which is S23, not the value we want, isn't it? We want this one, the lower one there. Then you hit enter. Then you come to continue. So remember, you know this one you already brought it in via the, sorry, control Z. You see, I've not carried with everything. So I must carry with all these values, control X, sorry. So it's from here with these ones. Control X. I paste it here, Control V. So here, the gross tax here equal sign sum. You press tab, this one, isn't it? Remember, pay already paid. So it's a negative value. So maybe we go back to the equation, of course. Pay was monthly 30,000. So 30 times 12. 1, 2, 3. Multiplied by 12. Then the affordable housing levy, negative 1.5% multiplied by gross, isn't it? So the gross is a before allowable deduction, isn't it? This is the gross. I'll confirm that again, I'm wondering. Then this relief will be doing it out. Personal relief is entitled to 28,800, isn't it? He didn't have any other one. So it was only this one. He didn't have even any other one. So equal sign, sum, you press tab, then you select control, control, enter, control, bold. So this will be the net, control, alt HBU, the net tax payable, control, bold, isn't it? So what you do, alt HBT, isn't it? Just the formatting of the data, everything else is done. Just that way. Then also the main one, you can do to merge. You select two of them, control bold, alt HBT, then control X, control V, control bold. That's the total income. So this is what I wanted. So maybe this one, control C. So you finished, control V. So I think control C, control V, control C, control V. So you will be using this one, control bold, alt HBN. So this is the format one. This is individual or employment income. Isn't it? So that's it. Then with also the bands. So maybe I'll change these bands here, control C, so that under formats, control V. Isn't it? So even this one is not important anymore. Isn't it? So I'm just sharing this file immediately. Then you'll have a look at it. So maybe let me check the chat. You see, let me just let me confirm on the treatment, but for the format, it is not. You see, housing levy, it is not a tax. It is not a relief. You can see relief starts from here. You see, this pay, you pay per month, isn't it? Affordable levy, here it is. So, where is it? Here. Each employee and employer shall pay affordable housing levy at the rate of 1.5% on the employee's gross monthly salary. Remit the amount comprising the employees and the employer's payment within 9 working days after the end of the month in which the payment is due. So, if you are computing here on the formats, if you are computing all of the tax, isn't it? So here we have the gross tax, isn't it? We must remove the pay because the pay also pay as you earn, you pay monthly. Housing levy, you remove it because you pay monthly. Personal relief, these ones are just reliefs. You get, but this one you remove them because you are paying them monthly. You have already paid them. Then you cannot be taxed them again. That's what we mean. Okay, I think for today the class will end there. Let me just share the file immediately, and also the video after conversion will come through, isn't it? So we'll continue from there, and we'll be using only this file for the all BDA taxation applications, isn't it? So I think